Hi, I'm David Scranton, and thanks for clicking this video. Because today we're talking about personal finance and the good habits to establish before you head into retirement. And I'm here with Jeff Small, president of Arbor Financial Services, as well as Jim Rogers, the chairman of Rogers Holdings and Beeland Trust Incorporated. Gentlemen, great to have you both back on the show, as usual.
I am delighted to be here. I'm in Singapore in quarantine.
In Singapore in quarantine? Well, I know you're in Singapore. I'm sorry to hear you're in quarantine, Jim. We're kind of all in quarantine, though, in general with this virus. However, we're talking about personal finance today. And I know you studied philosophy. What is your personal philosophy when it comes to managing money?
Buy low and sell high.
That's a pretty easy one. You can give us...
Oh, I know it sounds easy, David, but it is not easy. It sounds so easy and it sounds so wonderful. And you see people on TV and you say, I could do that. I could have bought Apple. Ha. The problem is knowing what is low and what is high. That's the very difficult part. I have learned over the years to try to find things that are ignored and that are cheap because people ignore them, but where there's a positive change taking place. If you can find something cheap, where there's change, good change taking place, you might make a lot of money.
So buying incorrectly, you say, could be the biggest mistake when it comes to personal finances. And the average investor really doesn't know when to buy, do they, Jim?
The average investor should not do anything until he or she knows a lot about something. Don't listen to hot tips. Everybody wants a hot tip, David. Everybody wants to be rich this week. Avoid hot tips and wait until you yourself know a lot about something, and then do some more research and then buy, and then call me, because that's how you get rich.
Well, the average investor is generally trying to get rich, Jim, and so I think that focus really undermines the potential to be successful in retirement or to achieve the retirement goals, don't you think?
If you want to listen to hot tips and jump in and out all the time, you're never going to be successful and you're never going to be rich and you're going to be working the rest of your life.
So Jim, I'm confused. Jim, I thought you made your investment decisions by reading the stuff on Reddit. I mean, that's not how you make buy-sell decisions. I don't know how else to do it then.
I watch David Scranton.
I love it. I love it. There you go. That's good. That's good advice. And I appreciate the pitch. You know, you said last time we had spoken to you in June that it's bad to be young today. And I know you're talking about the national debt and what we're doing as a country. And I want to talk about that with you in the next segment. But do you think even as an investor, it's harder for young people today to buy low and sell high than maybe when we were growing up because of all the computerized trading and how manipulated values are?
Well, you can always find something that's cheap. I mean, Russia's cheap right now. Commodities are cheap right now. There's always something that's cheap if you do your research and look around. And certainly the United States stock market's at an all-time high. That's not cheap. Property is in a bubble in many places. Bonds are in a bubble, but many stocks are still cheap.
I guess I figure when we were growing up, it was more buy and hold. You did your analysis. You could be sure it's undervalued. You buy and hold. Today, things seem so manipulated that it's got to be a little bit harder for the younger generation, it seems.
But David, I mean, silver is down 60% from its all-time high. Yeah. That might be cheap.
Yeah, okay.
I mean, sugar is down 70% from its all-time high. That's not a bubble. It might be cheap.
So Jim, Jeff here. Hey, listen, China is starting to slow down. And so I think the markets globally over there have underestimated the scale of growth on a potential slowdown. Do you think that's going to happen in the United States with all the stimulus that we've had, that we're underestimating the scale of potential slowdown when the stimulus ends?
Well, we've had the longest bull market in American history. In fact, one of the longest bull markets in any history. So it's going to end someday. Maybe the slowdown in China is one of the early signs that the world is going to have problems someday. I own Chinese shares. I have not sold any yet, but I certainly notice what's happening. I know that the Chinese central bank is not printing a lot of money like a lot of banks were, like a lot of people were. So maybe we're getting closer to I know we're getting closer to the end. I don't know that this is the end, though, Jeffrey.
Well, that's very interesting because I've heard a lot of very interesting commentary recently about how to reevaluate the market. But when you look at things like the Buffett indicator or the CAPE index, they're off the charts, Jim. I mean, they just seem completely unrealistic. How can the market march higher from here? Well, next year's earnings beat 2021's in the United States, I guess, is the ultimate question.
You are exactly right that all of the signs are there. We've seen this movie before. With stocks at areas where normally and historically they should be sold, and maybe they should be. But Jeffrey, what I suspect is that if they start going down, the Federal Reserve, the central bank, is going to panic and print even more money. And so there's going to be one more move up. Now, I'm not good market timing, but I would suspect that the Fed, because they want to keep their jobs, are going to keep this going as long as they can. It's going to end. It's certainly going to end within the next year or two. Maybe you should sell because I'm not selling yet.
I love that advice. That's great. Yeah, I have a friend actually who's a financial advisor, believe it or not. He says the same thing. He says, you want to make money, just buy when I sell, just sell when I buy. It's that easy. So Jim, you know, if somebody wants to stay in the game and they want to stay in the stock market because interest rates are low, where would you advise them today to look to do it in a way where maybe they're a little bit more protected?
Protected? You tell me how to. I've never used that word in the investment world. There's no such
Especially
thing.
in the stock market. I know.
Is that an oxymoron, Dave?
So, but where would you tell them right now then, maybe for the best opportunities that might have the longest positive run ahead versus places where you think the run, you know, the gig could be up?
Well, the places that I can see, the only places I see that are cheap, as I said before, commodities. You can look at commodity producers, or you can buy commodity ETFs. You don't have to buy futures. That's the best place. I can tell you that Russia is cheap. I suspect most of your viewers are not going to think about buying Russia. I've been buying Russia because it's very cheap. It's hated. Nobody likes Russia. So there are places, but they are getting fewer and further between. And if you don't want to worry about market timing, you know, everything Jeffrey says is right. Everything is at all-time highs and at very, very high levels, evaluation levels. And historically, this is the time to sell.
Yeah, I guess if you're going to be in the domestic markets, I guess you got to have one finger on the trigger. You got to watch it closely, because you certainly don't want to get caught in a downdraft. So Jim Rogers, thanks once again for being with us here. Thank you.
My pleasure.
And if you enjoyed this video, please give us a thumbs up and subscribe to our YouTube channel for more interviews with top names in the financial industry.